Well, it's 1 hour left for the trading session, and if you're a bull, you would want it to happen sooner rather than later, because it's a day when we are seeing a big gash down across the market. It's the biggest single session decline that we have seen in Nifty since September of 2022. So the biggest decline in the last almost 16 to 18 months, and the Nifty Bank too has seen a solid dropping of almost 1800 points. Been a while since we saw that kind of slide. Almost March 2022 was the kind of cut that we had seen as far as Bank Nifty is concerned. And the culprit today is clearly HDFC Bank. Almost 80,000 crore worth of market cap has been eroded by that bank. Today itself, it's the biggest intraday fall that we have seen in that stock in almost 3 years. In fact, over 3 years. The last time we saw that bigger decline was in May 2020. And definitely, it's adding almost 140 points to the downside, and there's a rub-off impact on ICICI Bank, Kotak Mahindra Bank, and together these three banks are adding almost 200 points to the Nifty downside, which is now staring at a 400-point cut. IT is the only sector which is trading in the green right now, all thanks to TCS, Infosys, HCL Tech. But the only respite being, Aisha, we are not alone in this fall. Europe has started with a cut of over 1%. Hang Seng was down a solid 4%. But it's HDFC Bank which is the weakest link in the market right now, and that's having a ripple effect.
Oh yeah, absolutely. I mean, to be fair, we started off on a weak handover from the rest of the globe, and Asia, of course, has plunged a lot more because China has missed the Q4 GDP estimates, has come in much lower than what the street was anticipating. The unemployment data as well, which, by the way, they've published after a long gap, is also not really infusing any confidence in the state of the economy there. But yes, European stocks as well. You've got UK inflation, which has risen quite sharply. All eyes, of course, on the takeaways from Davos. But yeah, across the board, you are seeing over a 1% cut coming in. So markets across the globe falling under their own weight. And today, of course, to add to that, we have HDFC Bank. And like Anisha was saying, its market cap is down by 80,000 crore rupees in today's session itself, in that almost 8% fall. Until yesterday, to think of it, it was down only about 5% from its year highs. So a lot of it gets shaved off, and clearly some of these large banks, remember ICICI Bank as well anticipated with its numbers on Saturday. So and then there's Kotak Bank as well later this week. So all these stocks pretty nervous ahead of their numbers. But that said, there's a lot else also happening in the market. You've got ICICI Lombard as well, better than expected operating performance. The stock started off in the green and still continues to do so, hold on to its gains. There's L&T Tech as well. They've maintained their FY24 guidance. So quite contrary as to what the market was going in with in terms of expectations ahead of this earnings season. IT has actually come out with flying colors, and because it was so oversold, the scope or margin of surprise definitely takes the stocks much higher than what they were sitting at ahead of the numbers. And similar story playing out with L&T Technologies as well today. IEX, that's the other one in focus, and we'll tell you the reason why. We'll play out that soundbite of the power minister as well. He spoke exclusively with us and said that the government will be going ahead with the coupling plan, and that's IEX in trade for you. 9.25% of a shave off is what IEX is currently seeing. In fact, let's hear out first from the power minister, and then we'll bring on board our chartists and dissect what's really happening in the market right now.
I think the study group that is that would have concluded its studies, so we'll decide on that. We'll decide on that very quickly. Our exchange is thriving, and our sector is growing hugely. As I said, that in energy terms, it has gone up from 1,000 billion units in 2014, it has gone up to about 1,600 billion units today. So in every sphere, the production has gone up, the consumption has gone up. Imagine demand going up by 80% and us meeting it.
Okay, point taken. So that's the latest coming in as far as the power minister is concerned. But we have Shilpa Rao joining us to talk to us about technicals, Anand Tandon on the fundamentals. But since fundamentals is the reason for the fall today, let me first take it across to Anand. Was HDFC numbers so bad that it warranted an 8% cut, or do you think it's a bit of an exaggerated move?
Still, I guess, is one of the largest stock round. relatively well owned by institutions. Now that margins take a while for it to cover, and the deposit growth needs to be far more aggressive than it has been able to demonstrate. What we see is a reaction to that kind of move. But if you were to step back and take a slightly longer view, the question is who has a better franchise in terms of being able to deposit. There is a lot of activity in the market on the basis that public sector banks have. Well, I would argue that if you are looking to raise deposit, you should be looking at private banks like HDFC with all that. There is going to be no doubt, and has been broadcast for a long time that there will be a reduction in the ROE. That has already peaked out.
Audio line. We'll try and reconnect with you in just a short while from now. But Shilpa, more than the Nifty, I want to discuss HDFC Bank. Clearly, that gap down has also gotten sold into that it opened at. Where does it head next? And purely because of the ramification it's had, not just for the Nifty, but Nifty Bank in particular today.
Good afternoon, everyone. Looking at HDFC Bank, yes, it is a pain right now. The support is now very steep down towards 1520. But the move till there will see Bank Nifty sliding towards 45,500 from here. So of course we will be cautious here. But as of now, I would take this today's fall as just one day set off, probably because of this, not as expected results from HDFC Bank, and we might see some sort of reversal from here and again continue towards highs.
Okay, so that's a take. Just highlighting a few other counters as well. Take a look at Procol. That's seen quite a few of bunched up trades happening, and post that stock had seen a bit of a slide. So that stock should come for you on the screen, though it's recovered quite a bit from the lowest point of the trading session. Sale is the other one, which is down about 5%, and Zomato and Loader Developers. These are some of the curious cases which have taken a knock of around 4 to 5%. While the names that still hold on to the green include names like Cochin Shipyard, up 8%. Capri Global up around 6%. We spoke with the management and they said that insurance business is likely to add 2% to the ROA of the company over the next 5 to 6 years. But since we're talking about HDFC Bank, one big bull for that particular counter has been Saurabh Mukherjee. He's been, of course, holding that stock for a long time, calling it a big compounder. But does he still hold that view today or not? Let's listen into his view.
I found the results to be solidly reassuring. I appreciate that some people are worried that the deposit growth isn't as high as expected, but my reckoning is that will come through. Sashi Jagdishan reiterated that this fiscal they'll set up 1,000 branches. I know that the previous target was 1,400. I reckon they'll get back to that number. Just to put 1,400 branches a year, opening 1,400 branches a year into perspective, a well-run regional bank like Federal Bank has all of 1,400 branches, right? So Federal Bank is a good bank. They have 1,400 branches in total. What HDFC Bank is aiming to do is set up 1,400 branches every single year. This year, they seem to be on track for 1,400. Operationally, the bank is in good shape. Deposit growth, whilst less than what market was expecting, is still on an incremental CASA basis. They're pulling in 15% of India's CASA, which I think is very impressive. So we remain happy with the position. We think something like 8-9%, perhaps even close to 10% of our flagship product is HDFC Bank.
Well, shifting focus now to the ongoing 54th World Economic Forum in Davos, Switzerland. In a blog post on the World Economic Forum website, the Adani Group chairman highlighted the significance of green hydrogen as an alternative to fossil fuels that will help the world move towards a zero-carbon future. Drawing attention to realize its full potential, the blog draws the spotlight on the importance of broader adoption of the alternate fuel. The shift, he says, will help India achieve energy security and improve air quality across cities. But we will take a very quick break, come right back. We'll analyze and dissect the market internals on the other side. 150 crore rupees PAT performance for Q3 for Asian Paints definitely is a big beat as to what we were anticipating, because the ET Now poll was penciling in a figure around 1350 odd crore rupees. Of course, softer raw material prices this particular quarter, low base effect were to aid Asian Paints' performance, but 1450 crore rupees definitely optically looks like a decent beat. Remember, demand was also stronger in this particular quarter gone by, October, November, with December seeing more muted numbers. We were expecting volume growth of about almost 10%, but those internals are yet to come out. The stock saw a dip, and now again it's seeing a bit of a pickup. We still don't have the top line number though. Do we?
Yes, we do have the top line number, and it's a bit softer versus the expectation. Okay. It stands at around 9,075 crore thereabouts. We were working with 9,375. But the bigger news is that the volume growth has come in at 12%. We were expecting a 10% growth. Despite that beat coming in on the volume front, the value hasn't really matched up. So there's clearly some pricing pressure. However, there's a green shoot in terms of the margin figure, because that is much better than expected in terms of the overall margins. The company also points out that softer raw material environment and work on sourcing formulation efficiencies is something which drove the margins, and that's why the PBDIT margin has increased by 400 basis points to 22.7%. In terms of the other commentary as well, they talk about how the decorative and industrial coatings value growth has come in at 6.1%. They are seeing some moderation in demand in the latter part of the quarter is what they have witnessed, but they're saying that going forward, we will focus on driving strong sales growth and continue to invest in multiple initiatives and solutions. We also have Abneesh Roy joining us to talk to us about the earnings and what he makes of it. Abneesh, hi, good to be speaking with you. I think overall this is a decent set that the company has reported, a 12% volume growth. There's a beat when it comes to profitability. However, top line is a bit on the weaker side.
So 3-4 key things. Of course, company had taken around 1 or 2% price cut because they were having much higher gross margins and EBITDA margin. And normally, paint companies operate in a band of margins. That's why slight miss in terms of sales is there. But if I see what are the good things in the results, 12% volume growth is a good number. Currently, there is a all-around slowdown in consumption. So to that extent, 12% volume growth is a good number. But what has helped Asian Paint is the good festival season. Last year, festival season was quite weak because the monsoon end and Diwali, there was very little time of just 2 weeks, which is very less. This time, there was enough gap. Plus, the marriage season was also very strong. Almost 35 lakh weddings were there. Margins also was quite strong. It is clearly ahead of expectation with 400 bips kind of an improvement. So overall, good set of numbers and mostly 12% volume growth, slightly ahead of our and street expectation of around 11% kind of number. So the only slight miss in sales is just 1%. And in our view, that's also because the company had taken around 2% kind of a price cut, given the stronger margin. So we are positive on the company, but we'll watch out for Grasim's entry in the next 2 months, which is going to be a key monitorable for the sector.
They've actually, set out a guidance that they did earlier that they are going to see low double-digit guidance, and that's exactly what they've delivered. Amnish, hi, what's been your take on the numbers with the 12% volume picture that they've posted? Yes, it's been a slight miss on the top line, but the PAT has been higher than street estimates.
Yeah, see, there's a beat on the margins clearly, and the volumes are also, say, a percentage higher than what we anticipated. But definitely, I think a lot of this volume growth has come back at the expense of your, you can say, the realizations, because the realizations definitely, they seem to be under pressure, maybe due to mix or maybe because of the reasons that they wanted to keep the prices competitive. And I think post your festival season, there has been an incremental 1% price cut. I think numbers, if you look broadly, there is nothing, I would say, negative in the numbers on the volume front, on the margins front. So the numbers are absolutely, I would say, fine in that respect.
Abneesh, coming back to you, what then explains the dip that we are seeing in the stock price? Do you think there's something else which is also worrying the street a bit? And any initial sense as to what you will be doing with your estimates?
So yes, today is a very, very tough day for market. So if you see, everything is red only. So to that extent, that I think is the key reason. Apart from that, of course, now results are done, and so market would like to see what's happening on the Grasim entry. Otherwise, if you see, results are absolutely okay. There's no problem in terms of results. Results are good, but it's mostly in line with expectation. At the sales and volume front, if you see 1% plus minus. At the EBITDA front, things are much better than expectation. Margins much better than expectation. So yes, that's a good number. But markets are very, very tough today. Most of the indices are quite weak. The index is 2% lower overall index. Plus now Grassimetry is a key monitorable. In terms of estimate, as I said, sales and volumes are in line and EBITDA is ahead. So we'll see on that front. Going ahead in FY25, we see as of now raw material not being a concern because titanium dioxide and crude both are absolutely in control or benign because global there is a slowdown, there is a recession. So the supply demand clearly is in favor of Asian Paint from a raw material perspective. So we are positive in the stock, but today clearly the markets are overall quite weak.
Reworking your price targets, would you, on Asian Paints after the numbers?
So it's a function of the EPS, etc. As of now, we don't see a big change to that. So we are positive on the company from a one-year perspective. So we'll wait for the call, which is at 5 p.m. to get more clarity on the growth assumptions which company is expecting. There is a slowdown overall in terms of the consumption. So we'll wait for that. Q3, of course, because of the wedding season and because of the full festival benefit, the 12% volume growth has to be seen in context of that. But we are already building most of the slowdown in our numbers. But we'll wait for the call to get more clarity.
Amnish, what's the Prabhudas Leeladhar house call post the numbers?
You see, the numbers, practically, they don't call for any big change as far as estimates or rating is concerned. And we are positive on the company per se. It's a survivor, it's a market leader. But having said that, Asian Paints is perhaps one of the most expensive paint stocks, not only in India, but globally. So when the stock is trading, say, I think it's close to 50 times on FY26 earnings. So in the context of Grasim's entry into, you can say, the decorative paint business and the kind of P multiple stock is trading at, because I think currently it would be, say, 50 plus on FY26. So I think that makes the upside capped at least for the near to medium term. So while in the long term, you can say it can give you returns. In the near term, I'm very doubtful whether the stock will give any meaningful returns from the current levels.
Expecting meaningful returns. On that note, gentlemen, we let you go. The market mood continues to be a spoil sport because we have broken below the mark of 21,600 now. So an important mark being broken on the Nifty, and the cut on the Nifty bank has exaggerated to over 2,000 points. Even if you look at the HDFC Bank stock, that's taken a slide of over 8%. There's a 4.25% cut coming in as far as Nifty Bank is concerned. That's a very, very, very sharp number that we are looking at. HDFC Bank is down about 8%. Nifty, of course, has taken a bit of a slide, and it doesn't look like there's any buying on dips happening at this point of time.
There isn't, because look at the rub-off that HDFC Bank, Anisha, is having on the other private banking majors, right? Kotak is now down 3.5% almost on futures. Axis is heading in for a 3% decline. There's ICICI Bank, which is down 2.5%. And, you know, similar is actually the state with the big boys like SBI too. That's also down a good 1.5% or so. And remember, all these are slated to come out with their numbers. HDFC Bank has been the first of the lot to do so. So really, and you know, I would definitely want to revisit all those calls which end of last year had a buy on, you know, these private banking majors. So let's see where they head from here. But I think we have Anand Tandon back with us. Yeah, we do. Anand, you know, apologies for that audio, but you were making a point on HDFC Bank and what to do now with the weakness that the stock is seeing.
So obviously, as I said, you know, you are looking at an issue where the deposit growth is slower than what the market was anticipating. And more importantly, it means that the credit growth, which is actually doing quite well, has to be slowed down a bit. But on the other hand, you know, the extra capital that they have had to keep has peaked out, and therefore they will start to come down. The fall that they had already projected, which had been forecast by the management, that the ROE will have to fall by at least 50 basis points, has already started to play out. So while it may take a little while longer for it to go back to a sensible growth number, I would still argue that, you know, you will get a reasonable double-digit growth from the HDFC Bank going forward. And this kind of fall, you know, we keep hearing there is a lot of money on the sidelines. Well, even if you had assumed that before this fall, there was only a 10% upside. Now there is a 15 to 17% upside. So there is no particular reason that one should be not looking to buy in now, especially if you have a bullish view. Of course, if you are skeptical about the market, that's a different point of view altogether. But I would still think that, a bank like HDFC Bank falls part of your core portfolio. There is not much that you can do other than to trade off at the margin.
Yeah, but it's just that the conviction seems to be missing, because despite that slide, there are no buyers which are standing despite the liquidity and the lack of ideas that everybody keeps talking about. But since it's such a sharp fall, let me go back to Naresh and get his ideas as to what are the levels to watch out for Nifty Bank, for Nifty now, and also, of course, HDFC Bank. Naresh, your view?
So starting with Nifty, the recent swing low is around 21,400, 500 levels. So that should be a price point to watch out for. Then on Bank Nifty, we've broken the recent swing lows. The next one is at 45,500. So that should be a price point where we should see a reversal from. HDFC Bank, we are back to the lower end of the range. If we go back to the last almost 3-4 years, every time it has gone to 1,700, it has flopped. 1,500 is the base zone. So I would expect 1,500, 1,530 to be a zone from where it should reverse.
That reverses or not, because it's very close to its 52-week lows as well, which is 1,400 thereabouts. The stock just meandering at the lowest point of the trading session. 150 points contributed by HDFC Bank alone. Even Reliance has actually given up. At the start of the day, Reliance was holding in the green. It was batting for the bulls. Now that also has completely reversed course and is at the lowest point of the trading session. Over a percentage point cut coming in on Reliance. It's only IT, if you must, and Infosys and TCS and HCL Tech, which are batting for the bulls right now, because these three stocks are holding up in the green. But Shilpa, let me get you in on other stocks which are there in the market as well. Let's talk about IEX, that's down about 11%. And then, of course, you also have Zomato, which is taking quite a bit of, knock. Obviously, the entire market is under pressure, but just singling it out because it's a 5% slide.
Talking about IEX is also at a very crucial support at around 144 to 143 zones. So if these levels are held on to, then we might see a reversal back towards 155 to 160 zones. The reaction is to the news of, making a standardized price all over the country, that is where the beating down is taken by the stock. So this level should be held on now, and we should look again for targets of 155 to 160 zones.
Okay, so that's the take coming in on IEX at this point of time. In fact, we'll do one thing. We'll take a short break on the show. But as we do that, listen in to the commentary. And in fact, Anand, we'll let you go on that note. Thanks so much for joining us today, despite it being a bit of a scratchy line. But as we slip into that break, listen in to the commentary coming in from Deloitte as to what they make of the overall movement that we are seeing in India right now and what to expect from Budget 2024.
From a personal taxation standpoint, not much change is expected. However, we could expect amendments towards simplification of tax, ease of compliance, and a review of Chapter 6A. As regards simplification of taxes, additional steps to make the new tax regime more attractive, with further widening of the slabs and reduction of some of the tax rates, could be on the cards. A clear and concise capital gains tax regime to boost the capital markets is expected as well. Our capital gains regime is complex, dependent on period of holding, residential status, nature of asset, and with ever-increasing types of products, compliance becomes extremely difficult for a layman. Review of Chapter 6A may also be on the cards on some key areas only, providing a larger cover for medical insurance with ever-increasing medical costs. There is an expectation that the government will increase the relief under Section 80D. Removing the differentiation in treatment of interest on bank deposits, on savings deposits and fixed deposits, and bringing the thresholds of Section 80 TTA at par with Section 80 TTB is expected as well. From an ease of compliance perspective, with a growing number of individuals who are crossing borders, traveling on work, business overseas, and claiming the benefits of double taxation treaties, these should be made much more simple. For instance, a relaxation of treaty benefits and process for filing of Form 67 for foreign tax credits, and alignment for a filing of India tax return with the overseas tax return in a calendar year country is required for proper compliances. While there is judicial precedence, clarification is required in the law for treaty reliefs to be provided at the stage of tax withholding by the employer, and the relevant forms, be it Form 24Q, be it 16, should also be enabled for such claims.
No respite at all for the market. In fact, trending lower, 21,550 is what we are staring at. Almost a 500-point gash down is what we have at our hands as far as Nifty is concerned. It's 2,100 points when it comes to the Bank Nifty. And yes, the culprit today is clearly HDFC Bank, which is down over 8% as we speak. Almost a 9% cut coming in. Of course, the delivery volumes for that one is fairly large. And maybe it seems like a couple of institutions and mutual funds have also thrown in the towel, given the fact that a lot of these mutual funds held a very high percentage as HDFC Bank in their portfolios as well. But since that's the biggest talking point, let me start with just that. Dipan, what do you make of this weakness that we are seeing in the market? HDFC Bank, of course, is the starting point, but across the board, there's a lot of weakness. Does it give you the opportunity to buy into it, or do you think this is just the start of the fall? We were just waiting for a trigger and it is only started.
Good afternoon, and thank you for having me on your show. This is something which I think I had articulated as well, that the earnings season may turn out to be a bit of a disappointment purely because of base effect and very heightened expectations. And I think HDFC Bank has just kind of been the first result, which I think proves this hypothesis that the earnings, although they are pretty much decent, but just the expectations are running high and earnings may be slightly muted on a year-on-year basis because the base effect will catch up. And I think this trend will continue right throughout the earnings season for many of the blue chip companies which have run up significantly. Only exception, of course, is large cap IT, where there were hardly any expectations and even just about beating the expectations of the investors and the analysts led to a rally in stocks. But by and large, it's going to be a tough earnings season. And you can expect this kind of volatility. So I don't think the market will stop at these levels. You can see a deeper correction. So I'm not buying anything at this point of time.
Okay, but how is it that you're protecting capital, Dipan? Would you say that book profits, and this time not just restricted to small and mid caps, but even large caps perhaps?
I think it's a good idea to book some profit at this point of time, especially in slightly not so great fundamental stocks, especially the ones which have run up significantly and are trading at very rich multiples, where the track record or the corporate governance standards are a bit of a suspect. So those should be targeted first. You may not sell out completely, but at least you should trim your positions across the board. And one other important decision is that not to invest any further money at these levels. See, most investors keep getting some amount of incremental cash flows, which they want to deploy into equities. I think that they should pause at this point of time. If my sense is my expectation, and I reserve the right to be wrong, is that you will see the markets trade much lower from these levels as the earnings season progresses.
Okay, so there's a clear call coming in that there might be further weakness because earnings season might not be as strong as Street was expecting. But as he pointed out, it was IT space which was actually overperforming or performing better versus the muted expectation. Today, of course, the numbers from LTI Mindtree is expected. Let me quickly run you through what the expectation is. The constant currency growth is expected at around 1%. The dollar revenue might stay flat at that $1,080 million in terms of the dollar revenue. Rupee revenue is seen at now 9,030 crore thereabout as far as LTI Mindtree is concerned. Margins might take a bit of a knock by around 30 basis points because there's a poor revenue mix at play. There's pass-through revenue expected this time around. While it does support the top line, on the margin front, it's a bit dilutive and hence we're expecting a slide there. Though the profitability is expected to be flat, the important bit would be to hear the management commentary. Last time they had already rolled back their guidance when they had earlier said that double-digit growth is likely in FY24. They had rolled that back, but Street now is expecting at least a 7 to 9% kind of growth. Can they deliver that? Is the big question to watch out for. But Shilpa, since IT has been one pack which has been showing a lot of resilience, of course today TCS, Infosys is trending higher. You also have LTI Mindtree going decently strong into its earnings given the market setup. What is your recommendation within the IT pack?
IT, I would prefer OFSs from here. We see a very high volume strike today as well. And stock is trading at around 5100 zones. I believe from here 50 to 50 to 5300 can happen very soon. There's a lot of increase in open interest as well. So this is one stock I'm looking at IT pack right now.
Oracle Finance is the one that you're watching out for. But in the meantime, take a look at Go Fashion. That's seen a bit of a perk up. RVNL, Godrej Industries. These are some of the stocks which are seeing some sort of traction from the bottom of the day. Clearly, the day has belonged to the PSUs as well. Cochin Shipyard, that's higher by 8%. RVNL, as just flagged out, is 7% higher. Mishra Dhatu Nigam is 6% higher. MSTC, Indian Railway Financial Corporation, Hoodco. These are the names which are actually doing well. Nuresh, within the public sector entities, which are the strongest charts where the risk reward is still favorable?
That's a tough question because majority of the names have gone up in a major way. So the only places where there is still strength is the larger PSU names, which is where you get into ONGC, Power Grid, and even a State Bank of India. Because even the smallest names like a ITI or even a MSTC, majority of the names have gone up. In the railway space, there is only one stock left, that is RITES. So the RITES could be interesting out of all the names.
RITES and a couple of others. But coming back to a conversation about earnings, Dipan, do you think financials, which was expected to see a bit of a pickup given the underperformance we had seen last year, that case is getting challenged now because for the initial set of numbers that we have seen, there's clearly going to be increased fight for deposits and the credit cost is something which might come under pressure. Do you think this is getting reflected in the stock prices well enough?
I think there is somewhat of extrapolation from HDFC Bank's numbers onto rest of the banks and NBFCs. And yes, certainly there are some minor headwinds as regards net interest margin ratios and marginal increases in NPAs. But I don't think that the longer term bull market or the longer term positive trends in NBFC banks is going to materially change. And also same holds true for a lot of the other earnings in other sectors as well. All I'm trying to say over here is that expect one or two quarters of slightly softer earnings, which on a standalone basis, without considering the stock price performance and the invested expectation, will be decent. But it's just that, for stock prices to move up from these levels, not only do you need companies to beat their earnings expectations significantly, but also for investors to lower the expectations, and that's not happening. So it's just a bit of an expectation mismatch which will cause a correction in the market, and that correction could easily be 8 to 10% on the broad market indices from these levels also. It's not that this multi-year bull market is now over or something. It's just that this phase, I think, of the bull market would perhaps end as this earnings season gathers momentum.
But given the fact that long-term bull market is still intact, Dipan, I'm sure at some point of time one needs to keep the buying list ready to deploy, maybe if not today, over the course of next 2-3 weeks, because obviously it's impossible to time the bottom. If you had to keep your shopping list ready, which are the sectors and stocks that you would watch out for?
See, I don't want to answer that question, and I'm going to duck it for the simple reason that we have an earnings season coming up, and a lot of companies will come with good numbers and not so good numbers and disappointments as well. And we're just too close to this earnings season, so I just like to wait and watch. Normally, I advise clients and we ourselves do not do any major investing or trading activity during the earnings season. Like, for example, say a week ago, I told you about HDFC Bank, and mind you, HDFC Bank has been on the buy list of almost every fund manager and analyst. And we had a number like this, then there was no point making that recommendation at that point of time. So it's better that you see the results, analyze it, see what the management has to say, where is the price to earnings multiple at this point of time, and then maybe make a more informed investment decision. But we all know of the larger investment themes in India, that is the capital goods sector, the consumption-oriented sectors, and to an extent, I think IT also is revving up pretty well. So broadly, these are the three investment themes that we are presently invested in and looking for new ideas over there. It's just that you want to see the results and then take a plunge.
Appreciate that. So those were the broad themes. We're of course very close to the earnings season to give the names. But talking about earnings, IndusInd Bank is expected to come out with its earnings tomorrow. What's the street expecting, Gaurav?
Yeah, so if we talk about IndusInd Bank, let's see what the street is expecting first. If we talk about net interest income, they are penciling in the growth of 16.5% in net interest income on a YOY basis, and it could come somewhere in the range of 5,200 crore levels. If we talk about pre-provisional operating profit, they are penciling in a growth of 8.3% on a YOY basis, because we may see some kind of uptick in the OPEX cost, as well as we may see some kind of decline in the treasury income for the bank in this quarter. If we talk about profitability after tax, it could grow somewhere in the range of 16% on a YOY basis, and it could come somewhere in the range of 2,200 crore levels, because street is expecting provisions to remain at a lower side in this quarter for the bank. Talking about the provisional data, the bank has already given total advances growth of 20% on a YOY basis, and total deposit growth was also strong at 13% on a YOY basis. If we talk about retail deposits, now they stand at 45% of the total deposits, but CASA ratio somewhere was declined by 90 bips on a quarter-on-quarter basis, and now it stands at 13.5%. So from here on, what we can expect from the management is that any commentary on the margin trajectory, because interest rates are rising, and consensus is expecting NIMs to stay stabilized at 4.29%, as what has been there for the bank already. Let's also look at the commentary for the loan growth guidance for FY25. Any commentary on the OPEX operating expenses, or any number that comes up on the operating expenses, will be a crucial thing for the bank to watch out for. And lastly, we should also look out for a commentary which would come for a CASA ratios growth going ahead. Let's also look at the slippage ratio, because consensus is expecting this to remain low, and this will help the bank's asset quality to remain strong for the quarter. So these are the key expectations from the consensus from the bank's results coming up tomorrow.
Okay, that's the anticipation from IndusInd Bank. And that's the other thing, right, Dipan? That this fear that you're seeing after HDFC Bank play out amongst the market, it's rubbing off on ICICI Bank and IndusInd also, which are due to report their numbers later this week.
I think it's natural. You see, also there's a lot of trading activity, and there's a lot of F&O positions as well in the market at this point of time, and kind of a perceived to be bad number like HDFC is going to have a impact on other peer group companies as well. But it doesn't mean that the results per se of IndusInd or ICICI Bank may be as bad as HDFC Bank, because there are different considerations with HDFC Bank, the merger being the most important one. But I still maintain that the numbers will be decent if you look at them, in the manner if you remove the expectations from the numbers, they'll be decent, and it will show that these companies are on course. They are following the path. They are more or less within the kind of internal management estimates. It's just that I've never seen the market enter a earnings season with this kind of an expectation that earnings will go up as fabulously as the street is expecting. That may not materialize.
Clearly, expectation gap is something which is actually resulting in those exaggerated stock moves as well. But before I let you go, I wanted to get your word as far as the technical picks are concerned on the BTST name. Shilpa, what's the BTSC trade or STBT trade that you would want to recommend?
Definitely go for a BTST right now, because markets are at crucial levels again. We might see a bounce tomorrow. So in that case, I believe, safe space pharma. Lupin, I believe, is a, good buy. I had recommended the same in Prabhudas Leeladhar as well. I believe, with the stop loss buy above 1405 from here, and, with a stop loss of 1398, and you could see targets of 1430 coming up. And the other one would be a buy in Gujarat Gas. Gujarat Gas has a strong support at 550 zones. So, on declines towards 554, one can buy with a stop loss of 550 and look for targets of 570 to 580 zones.
Okay, Shilpa, great to have you in the show. We'll let you go on that note. Thanks as always for joining in. I don't know whether to focus on names which are just about holding on to the green, and IT namely, along with an SBI Life, Tara Consumer, etc. But a large part of the market is weighing heavy. Reliance is well lower by about 1%. There's ITC also, which is down. Look at Asian Paints as well. Even though the numbers were beat, both in terms of margins, volume growth and PAT, but after that little bit of an adjustment, the revenues were, of course, a miss. And, the numbers have clearly been good, prima facie. 1.6% lower is where Asian Paints is right now. M&M, SBI, Bajaj Auto, IndusInd Bank, the Adani names, it's all weighing heavy on the indexes as we speak right now. Tata Steel, SAIL, metals as well are especially a weak link in today's trading session. But Naresh, I want to take your BTST ideas, or I don't know whether today it's going to be an STBT list.
So BTST ideas again from the defensive names. First is the Band Power Grid, which is closer to the last 52-week high. Stop loss at 237, target price of 245. Second is the buy on Apollo Hospitals, which made a new 52-week high today. Stop loss at 5,900, target price of 6,000.
Okay, this is some BTST ideas coming in from Naresh right now. But Dipan, you've got Reliance as well, due to report its numbers. We've seen the rally that's played out in the last 1 week or so on Reliance. Today, of course, a lot of it is getting undone thanks to the overall market weakness. But what's the expectation from the earnings on Friday?
I think it'll be a decent set of earnings. More or less, I think the numbers will be quite good. But as I said, expectations are running a bit high. You could expect a better quarter as far as Jio is concerned, considering the kind of increases in ARPUs that we have seen and new subscriber additions as well. But a lot of questions will be on the new investments in new energy which Reliance is making. And of course, every time we do ask this question about unlocking of the value of the subsidiaries, that is Jio, as well as the retail business, how that is being unlocked. Is it going to be an IPO or split in the company? I think that's the most important question that the management needs to answer.
Value unlocking has been long awaited there, but LIC, that saw quite a bit of breakout at the start of the trading session, Naresh. We saw it finally go past the issue price, which was there for policyholders as well as the retail shareholders, was trading at record high levels, but suddenly it made a bit of a U-turn from there, given the market mood. But do you see any inherent strength in the chart?
So generally, we do see some bit of a resistance around the previous highs, especially around the IPO day highs. Now, going forward, the stock could consolidate between 840 to 920, then eventually break the 920 mark. So closer to 840, 860 is what you want to buy. But overall structure is positive. This rally from 600 to 900 was on very good volumes. So a buy on dips on LIC of India, I would expect eventually it will go above the IPO highs.
Did I think for a brief bit today, right, Anisha? It already made it to not just the IPO price, but I think the listing price also.
So listing happened at a discount. So as it is, it was past the listing price before it is going to be past the issue price, and it did go past the issue price for policy holders and the retail shareholders because there was a discount there. The actual listed issue price was 949, but most part of the people were either the part of retail or the investor or the policy holder bucket. So for them, there was a bit of a green finally on their holdings. But talking about what else is happening in the market, clearly it's just the public sector entities, which is your, saving ground for now, because a lot of those names are holding up in the green. Other than that, on the losing side, South Indian Bank, Restaurant Brands Asia, these are some of the stocks which are coming under pressure. But if I had to ask you, Naresh, in terms of the banking names and the frontline private banks, if you had to take a bet right now and make use of this dip, which is the stock that you would recommend a buy as?
So in terms of banking, we'll be watching out for ICICI Bank. So what I expect is post the numbers of ICICI Access, maybe we could see some normalization in the markets. Today is an overreaction to HDFC Bank result. So 950, 975 is a good zone to buy ICICI Bank.
950, 970, thereabouts, where the stock is just about shutting down today. That's the anticipation from ICICI Bank. But as a tactical call, Dipan, since you do anticipate that the market is going to get a little bit weaker from here, what's the call on PSUs at large? Ex-banks, of course. Do you need to profit take there?
See, I think that if you're overweight PSUs, then just stay put, right? But if you're underweight PSU stocks and these stocks also will correct in line with the market, then it's a good entry point and to try and get equal weight or slightly overweight on PSU, including PSU banks also. I think look at Bank of Maharashtra numbers. I was personally quite impressed with the numbers in terms of credit growth, net interest income, and even their NPA levels. So more and more we are seeing the PSU banks' behavior and numbers and qualitative factors catching up with private sector banks. That is one. Then the large part of the PSUs are the ones engaged in capital goods. Those also will do very well. They have got great earnings visibility, be it in defense, be it in railways, because of bulging order book position. So at corrections, if they correct by 15-20% or so, then they are great entry points. And lastly, of course, are the oil marketing companies. Those I would just kind of, wait and watch. Although if there's a correction there, you could expect a trading rally because the environment is certainly improving for them in terms of lower oil prices. So I think more or less, if a portfolio is underweight PSU, then this correction is a good time to kind of get equal to overweight.
Okay, point taken. So that's the view on PSUs. On that note, we let you go. Dipan, Shilpa, as well as Naresh. Thanks so much for making time and speaking with us. But we're finally wrapping up the day, and the Bears would be, or rather the Bulls would be fairly excited that we're wrapping up the day, even though it is below 21,600. A very sharp knock is what we saw today. Over 400 points gone for the Nifty, 2,000 points rather gone for the Bank Nifty. It was almost 80,000 crore wipeout as far as the market capitalization of HDFC Bank is concerned. The biggest fall that we have seen since March of 2020 thereabouts. So almost 3 to 4 years since we haven't seen this bigger fall as far as HDFC Bank is concerned. Rub-off impact being seen on ICICI Bank, Kotak Mahindra Bank. Both those banks will report numbers on Saturday. On the flip side, however, Cochin Shipyard was holding in the green. There's a new ship repair facility at Kochi. LIC was finally above the issue price as we talked about, but from there slipped a bit. Result reaction was seen on ICICI Lombard as well as L&T Tech. Both of those stocks managed to hold up in the green, and Asian Paints also reported its numbers. It was a good show on the volume front, even though the revenue was a bit of a miss. The other stock we were watching out for was IEX. The power minister told ET Now that they're gonna go ahead with the market decoupling plan. Not a good news for IEX at all. No surprise then that stock was down about 10%. Other losers included names like Lodha Developers, Zomato, but clearly it was HDFC Bank which was a pain point for the market.
Oh yeah, absolutely. From overnight itself, when the ADR plunged about 5% or 6%, I think after its numbers, one was bracing ourselves for a weak start, but didn't anticipate that it's going to be this week eventually. But yeah, it's lost about almost 80 to 90 odd thousand crore rupees by way of market cap, and definitely has had its bearing on the rest of the banking pack and on the Nifty as well. But let's see what's in store for us tomorrow. We'll pick it up then again tomorrow morning at 8 a.m.